Hello, everyone. It's just that you've had a wonderful weekend and you have been having a great week so far. So, as you guys can see, right, this week we just have news, right, on Thursday this week. As I've said before, does this mean that, you know, you can't do nothing or you can't do anything? No, that's not what it means. It just means that whenever you have days such as this, you will need more confirmations. Whereas on some days where you have a high impact news event and you have sequential SMT, you don't really need to wait for a precision swing point. But whenever you have days which have no, foreseen volatility, which are news events, which are smoke screens, then you will have to look at price the way how, I will show you very shortly. So yes, the only day this week that we have news is Thursday. So first thing first, right? You guys can see how effective, right, sequential SMT is, right? And the thing about sequential SMT is, right, is the higher the cycle that you're looking at, the more accurate it will be, right? So here, whereas we're using the quadrennial cycle, which is comprised of years, right? So each year is a quarter, right? You can see that price has been, going into the direction that we have been anticipating. Also, you can see that, right, even though, right, price has been following our anticipation, it's not as clear as one would want it to be, right? So, in all honesty, right, looking at price right now, this is the clearest time frame, right? If you go down to any lower time frames, you will see little to anything that makes sense, right? So all price is doing right now is following the higher time frame order flow. It's basically all that's happening, right? Nothing else, just following the higher time frame order flow, which is dictated by sequential SMT. Here, right, you guys can see, right, we have the S&P 500 here, we have the NASDAQ here, and the Dow Jones right here. Always remember, right, whenever are you looking at the futures market, right, and this is my opinion, you should not trade the Dow, right? Why? The Dow is basically just, a quote unquote indicator for us. The only reason why we look at the Dow is to, gauge reversals that may happen in regards to the S&P 500 and NASDAQ, right? That's where, right, you'll find the majority of, their precision swing points or precision candles, right? Here, looking at the S&P 500, you can see that this low, right, we had sequential SMT between Monday and Tuesday, right? Following whereas we had a precision candle be formed, right? So this is a precision candle. Why is a precision candle? Because it's not a swing low, right? This is a precision swing point. This is a precision candle. This here, looking at the Dow, is a precision candle right here, right? As you can see, the Dow is doing basically the opposite of what's happening in regards to the majority of its family, right? So for now, you can see this is what we use to gauge the precision swing point here in regards to the weekly cycle, which is connected to the 1 hour time frame. So now I don't need this anymore. because the only thing that we use the Dow for is to realize or to see the precision candle and the precision swing point. So here, right, you can see that this is the main two pairs that you actually need in regards to futures, right? You don't need the Dow. You wouldn't need a Dow if you could see the precision swing point here already, right? You would not need a Dow, right? And looking at the weekly cycle, once you see a 1 hour precision swing point, right, and you mark that out, you have it occur here after you have sequential SMT, then you don't need to look at the Dow anymore, right? Until you have one of these asset classes, run through a high, right? So before going forward, here we had price, create sequential SMT, form a precision candle or a precision swing point. Then once you see this happen, you'll see a wick form, right? This wick right here, remember wicks are gaps. Once price trades into that, then you can look for expansion, which is what occurred right here, right? You can look for expansion. Here, why do we have price reversing here? Right, first of all, this right here is a precision candle as well, right? This candle right here, you can, if you look at the Dow, compare it, you will see it, right? Also, we had sequential SMT occur here at these highs again, right? Whereas we had the ES fail to trade above this high, and then we have the NASDAQ trading above this high, right? But the main thing to understand is when you should get in and when you should get out. So a precision swing point or a precision candle will function as how a order block should function if it were real, right? So this is where you will find your actual quote-unquote order block. It's not a order block, but it functions as how you would want or you would wish for one to function. So press traded into it, right? And when you see this happen, right, you see, for example, you're watching the formation of this candle here. You see price trade above this candle right here. What should you look for, right? You should wait for price to return within this wick, right? But you would look so on a lower time frame. So here, you can see that we have the SM, and this is just for clarity reasons, right? I don't want to, have too much clutter on the charts on your screen. So here we have the S&P 500, and here we have the NASDAQ, right? So this is where things get a bit interesting. We'll start from the lower half of this price leg, since that is where the price is coming from, right? So here again, what do we have here? We have a precision swing point right here, right? So this is the S&P 500. You can see this down close candle. Here, you can see that it's an up close candle, but that's not, the only thing that's there, right? Here, right, this up close candle, what is it? It's a gap. Now you know what a precision gap is, right? So whenever you have a precision swing point being a precision swing point and a fair value gap at the same time, that becomes a precision gap, right? For two reasons. It's a precision swing point, and the other reason is that there was no gap left right here before price continued higher, right? Another reason, right, there are actually more than two, but another reason is that here you have the gap breaking this high right here or trading above this breaker, right? And here, this candle did not do so, right? This breaker right here, as you guys can see, we had price fallen before I say anything else. This light color, so this blue line right here, it represents the wick or the high of the precision candle here, and this line here, looking at the NASDAQ, represents the high of the precision swing point. As you guys can see, all of the entries took place below this line. Now here we have this breaker, right? So here we had precision swing point, price traded higher, consolidated within. Then we had the formation of a fair value gap right here. And we all know that whenever you have a gap form within a breaker, it becomes high in probability. So here we had price consolidate a bit, precision candle, expand. Here we had the precision swing point form within, what is this? The precision gap, right? So no one else talks about this. No one else, well, people will talk about it now since we just started to talk about it. It seems simple, but it is not, right? There are a lot of things you can do with this, right? You can use it to, trade continuation in a trend, or simply just to spot reversals. So this one is basically straight to the point, right? So we know, yes, you have a lot of content already, and you're eager to learn something else. You want to learn something else that will help you, and this is what it is. This is how you can determine real, what would be the change in the state of delivery of price action, right? The first things to note, right, is that we have a higher time frame premise that we're working with here. No, it's not a gap or a level, but it is a cracking correlation, right? We already have higher time frame sequential SMT. We already have that. We already have this precision swing point forming within a higher time frame precision swing point, right? Then after that, this is what you use to get your high probability setup. This is what you use to get your high probability entry. Here, whereas you have, remember this blue line representing the higher precision swing point, right? We are below the true open of the day already. So all of this is happening below the true open, right? We have this right here, this gap, a precision gap. It trades above here. This doesn't trade above here. That is a actual shift in market structure. Price trades above here again, didn't trade above here. That's another shift in market structure, right? Remember that the higher time frame was already pointing higher, right? Then price trades down. Then you have the precision swing point meet the precision gap, while trading within this breaker, while being below the true open of the day. Then what do you have? You have expansion. Here, we are looking at Bitcoin, right? As you guys remember, since price was within this gap or trading within this gap, we expected higher prices, and that is what we have gotten so far. So here, price climbed higher, broke above this high, then we had price fall, and here we had what I would call the magic entry, sequential SMT, followed by what? A precision swing point. Price trades above here, fell within this gap. If you look at Ethereum, it did not fall within this gap. Then price just continued higher. And of course, this, is what we expect to be the next strong liquidity, something that we have been looking for since price was at these lows here. So yes, you will need to go over this a few times. There's a lot of things to take away from this. You'll see this same exact thing happen over and over and over, right? What's on the screen right now. If what you need, right, you can find within two assets. So for example, you're looking at the NASDAQ and the S&P 500, or the euro and the dollar index, right? If you can find a precision swing point there, if you can find a sequential SMT there, or if you find both of them there, you do not need the third asset, right? The only time you really draw for a third asset is when you can't find anything. And if you find nothing there, you draw for an asset that's outside of the asset class that you're focusing on, meaning that you'll be trying to find a cracking correlation, across different assets. So you'll be looking for a intermarket sequential SMT or a intermarket precision swing point precision candle or precision candle. And yes, you have intermarket precision gaps as well. So yes, every candle has a meaning. Every candle tells a story, and every movement in price, every closure in price means something. There's things in front of you right now that you can see. You can see a lot, but right, you can't see that yet, but you will eventually. So yes, before we end this, I'll be answering some questions right now for around the next 5 minutes or so. Someone said your mic's in mute. It's wrong, man. Don't say that. So yes, at this point, right, you don't need, right, me to just be just yapping for too long, right? You don't need that. You just need to get straight to the point, right? What do I need to make, the most accurate price action model ever? How to see reversals, how to know when there's a sign of a reversal, always see the signs before it happens. This is how, right? So you take this, you apply it to your charts, you study, and you'll see. And the funny thing is that the best thing is that right now it's hard. Of course, it's not going to always be hard. It's just hard because it's like basically the last 3 weeks before the, U.S. elections. Is it 3 or 2 weeks? We're pretty close. So yeah, after, you have all the volatility into the marketplace and you have the market being shaken a bit, you have the dollar index break out of the range that it's in. If you look on the weekly time frame or the monthly time frame, you'll see that range. When do you teach about crosses? We will eventually, but it's not that important right now because, right, we're teaching you things that, repeat over and over, and things that are not confusing, are things that work and are not hard to find. If you want to learn about crosses, it will be quite similar. It's just that some assets, right, needs to be moved here and there, but right, of course, it will not be as high probability as looking at the Nasdaq in comparison to the S&P 500. What makes a precision swing point high probability for you? If it forms after they receive sequential SMT, then it's high probability, right? Extremely high probability. And will we go more in depth in time-based concept? We are going in depth in time-based concept as we speak. Every time we talk, everything is based off of time. It's never off of a level. And if we talk about levels, then the level is always based off of time. That entry on the Nasdaq was also in a new week opening gap. Yeah. But, you don't need everything. So once, yes, right, you can ask within the group, ask who's successful, what do you do? And then you will start to realize that everyone that is successful, everyone that has, been successful in any way, or there are many ways that you can use this to be successful, right? They all have their models have similar traits, or some of them are very simple. They just use sequential SMT, right? And they just have the specific thing that they look for, or the specific cycle that they function with, right? You have some people that they spend their time, right, just looking from different cycles to different cycles. Some will be using the weekly cycle and the yearly cycle at the same time, which will be more difficult than just focusing on the weekly cycle alone and the 1 hour time frame, or just focusing on the daily cycle alone and the 50-minute time frame. Whenever you have sequential SMT at the top and sequential SMT at the bottom, what should you do? You should wait. right? Just wait until price breaks out of that range, because once price is within that range, then it becomes what? Low probability. That's just, grounds for you to get stopped out with ease. Right? Now, when sequential SMT and intermortgage sequential SMT at the same time, it's a doubling aspect. Is a doubling sequential SMT alone also a doubling aspect? Yes. And you can just use that alone, right, without a precision swing point, and then you can still have a model with that alone. Literally, that's what it is. Right? So yes, I hope that you found this useful, right? And so, well, let me answer this one first. If hardly no news, such as this week, how can we find high probability sequential SMTs? Should we look for weekly plus daily? So by default, right, the price action will be lower probability when you have no news. But as I've said before, it should not matter, right? You should always be using the same risk wherever you attempt to trade. You should always be using the same model at all times, right? So you shouldn't care per se about losing. You shouldn't care about any of that. You just follow your model and you do what you have to do, right? So yes, here someone says, hey Dave, Monday last week you said that we couldn't get an accurate play because of the US election using the QT framework. You've been real specific with your word choice in the recordings, and you've been dropping little one-liners about something else that we should be considering. When are we going to get the sauce to trade these market conditions, which you're talking about, the low probability market conditions, right? This is what it is, right? I thought the last 3 months of the year, we were going to get that understanding that works outside of QT. We are getting there, right? And the thing is that most of you, right, even when you get more, you're still going to want more, but you should be using the things that you have now, right? That's the main thing. You should be using the thing that you have now to make an income. You should be using the thing that you have now, which will help you, right, to understand yourself more, right? You shouldn't be, worrying about placing a trade now because you have something that works, right? You have something that works most of the time. Does it work every single time? No, and that's okay. That's just what this is. You need to understand that, right? You don't want to be here for 2-3 years, right after. Of course, it's gonna be free, but you don't want to be here for 3 years being like, oh, Dave, what's this? What does this mean? What does this mean? You already have something that works. Understand? You already have something that works. So use it. You need to use it. And if you're afraid to use it, you haven't backtested enough, or you just haven't been tape reading enough. You need to use the things that you have. Try to use them. If you use them, and there's a lot of things that you have, you can literally just take this, put it on this, make a model. Take this, I don't like this. Okay, let me use this. It's easier for me to see this. It's easier for me to understand this. This clicks with me better than this. Take that. Use it. Right? Yes, you'll get more, but when you get more and more and more, you'll be confused. You need to take the things that you have because they work. You can look in the chat. It's working for people. Of course, it doesn't work some of the times, but that's okay. It's not going to work every single time. 80% of the time, yes. Not every single time. Anytime you fail, it's just a human flaw. It's just a human flaw. So yes, I hope that you found this useful. We will be back here on the phone at Thursday at the same time, 6 p.m. Eastern Standard Time, sharp. Right? We will always be sharp as of now. Right? Last few weeks was hell. Right? Moving, all that stuff for the last month. So it was last month, I believe. Yes, so yeah. Hope you found this useful. Ciao.